This conference will now be recorded.
Good evening, everybody. This is Greg Morton. It is Saturday, March 26, 2022, and this is the weekend update for Canslim Growth Stock Investors, brought to you by the Greenville Eastside IBD Meetup Group, as well as the Stockyard Meetup Group. As always, this weekend reviews for educational purposes only, not recommended any stocks to buy or sell. All investing has substantial risk of big losses, so we want to learn first and only then invest. Or in plain English, you are responsible for writing your own rules. You're responsible for following your own rules. You're responsible for doing post-analysis on your trades which were made according to your rules, and then you're responsible for tweaking your rules as necessary. And that also includes correcting any mistakes, something you may have overlooked as we talked about at our last monthly meeting. So the brief topics for this weekend, as always, we'll look at the M factor. We had 3 follow-through days the week before last, week before this most recent week. So what do we see this week? Is it constructive action or destructive action? We'll look at some stocks that are behaving, and we'll look at our upcoming educational meeting as well as the last monthly meeting agenda briefly. So as always, as O'Neill teaches us, the M's the most important letter in Canslim. If you're wrong on the M, nothing else is going to be right. It's just not going to work. So per O'Neill's system, first we want to diagnose, we want to interpret, we do not ever want to predict. And we kind of look at 3 things in this order of priority: the action of leading stocks, actions of stocks we owned, which went from slim pickings to picking up even more this past week. Look at the market pulse, distribution day count, price and volume on the indexes. And so a week ago, we had 3 follow-through days, one on each of the indexes we look at: the NASDAQ, the S&P 500, and since sometimes IBD looks at the Dow, we can look at the Dow. So that was sort of unexpected. We're in the middle of a war and all this Fed uncertainty, but we got the follow-through day signals. So on the S&P 500, it was up 2.24%, and the Dow was up 1.35%. Those were the 3rd follow-through days in this bear market. They occurred on day 15. That was a week ago Wednesday, which was also the Fed meeting date. And the NASDAQ was up 3.77% that day, but it was only on day 2 of its rally, so that was not eligible for a follow-through day. But then on Friday, NASDAQ had its 3rd follow-through day in this bear market also on day 4 of the new rally, and it was up 2%. And so at the same time, all the MMTS on the coloring book flipped to green by then. The window of opportunity opened and IBD went back to confirmed uptrend. So after we had that happen a week ago, what did this week bring us? So let's take a look. Let's get out of here and we'll start with the index charts like we always do. Let's go over here. We'll start with the NASDAQ. Let's go to daily first. So you can see the 5 days of this week. Here was the follow-through day, which happened on that Friday. So these look like constructive bars, not super high volume. The RS line moved up. The 10-21 day continued to move up. The 10 is trying to cross over the 21 day. 21 is trying to get back above the 50. Of course, the 200 is still pretty far up here, but it's a process. So this is constructive. We're working on building that right side. If we look at the weekly chart on the NASDAQ, you can sort of see what I interpreted as 3 legs down. So we're watching here to see if we can get back above this high right here, which would look like this was going to continue on up, hopefully at that point, or is it going to stop here and come back down? Go back to the daily. As I said, the RS line's moving up. S&P 500 just moved back above and closed above all 3 moving average lines. You got the 21 and 10 are even closer to passing back over the 50, so we'd like to see those 50 days turn up also. NYSE also closed back above the 200-day. 10 and 21 are moving up nicely. Need to get those 50s going. You know, the RS line's still lagging on some of these indexes. The Dow, again, 10 has crossed back over the 21 and both moving up toward the 50. Small caps, 10 and 21 have crossed back over, closing above all three, keeping that closing low above the 21-day. S&P 600, about the same. 10 and 20 have crossed back over the 50, so trying to make some progress there also. So that is constructive. And if we, oops, sorry, I meant to click on the coloring book. So if we look at this past week, I just drew a little black line to show where the prior week ended. So here were the follow-through days. There were the two on Wednesday on the S&P 500 and the Dow. And then here was the third follow-through day in this entire bear market we've been in right here. Distribution days continue to fall off. Also this week, on Thursday, we had a subsequent follow-through day on the NASDAQ. So I labeled that as subsequent follow-through day number 3.1. So that is very constructive. We'd like to see some more of those. Most strong uptrends will have some of those subsequent follow-through days within the 25-day trading window after the follow-through day on that index. Had several accumulation days this week, and even though the NASDAQ was down on Friday, that was really a high range close. We had some breakouts. So for the growth stock trade, I treat it as an accumulation day. So I have 8 buying days, 10 selling days in the last 25-day window. So that's still upside down. In fact, that's been red. Wow, how far do we have to go back? So that's been red since right here, December 8th. So hopefully maybe this week we'll turn that around. We're dropping off some more red days, so that could be good. In the market school exposure, they're up to full exposure, M5, they're market school exposure 5, but we're still in a power outage. So hopefully the power outage will go away soon. That will take the 21 crossing back above the 50 on the NASDAQ, and then hopefully the power trend will come back on. And we talked about that at our last meeting and the rules for doing that. So you can see we've had some breakouts this week. I only show Canslim stocks. Breakouts, they're in dark green, so you can keep an eye on those and see how those are doing. But again, this is constructive, not destructive in any sense this week. And if we look at the group teaching portfolio, still down for the year, but a lot better than it was. I think we were down as high as 12 or 13%. So now we're down 3.28% for the year. Exposure was increased because of the follow-through days. So we're 80% invested on a cash basis, no margin used, but that's about 48% invested overall if you consider margin buying power. Have 2 that are full positions. Regeneron's a little more than a full position. SQM was a full position, but was hitting the profit goals, so sold some of that between the 20 and 25% profit goals, and still have 25% left managing on a short-term profit extension rules. So we'll keep an eye on these and see if there's a chance to push some of these to a full position if they give signals, and what other opportunities may be before us. So that's also constructive, making progress. Had 2 strong weeks overall when we look at the totals for the week right there on the right. So that's good. Go back over here. So we covered all that. Go back to the slideshow. So some key things to pay attention to. We've had 0 distribution days in the days immediately after those 3 follow-through days that we talked about. So that's constructive. Breakouts and our early entries are working and are making progress. So leading stocks are doing well. Seeing more and more setups, that's good. Moving average lines are being reconquered and put in the rearview mirror. We saw that on the index charts, and we had a subsequent follow-through day on the NASDAQ. It'd be nice to see some more of those on any of the indexes. And then the power outage could end soon. 21 will cross above the 50. And as I noted, the MMTS are all green, window of opportunities open. Matt Caruso's high-low signal on the NASDAQ is green. So those are all constructive things. So we still have a green light. Essentially, it's game time, but got to decide how are we going to handle that. So we still want to wade in slowly. Positions need to be making progress before exposure is increased further, and strength begat strength. So we'll remember not all follow-through days work. So we had to start increasing exposure on those follow-through days, particularly on the NASDAQ. Even if you have to buy an index fund, you want to go slow, start out with 1, 2, maybe 3 partial positions. This first couple worked in the group teaching portfolio. In fact, SQM was hitting the profit goal, as I noted. And so exposure can be increased if what you're doing is working. And of course, the best merchandise comes out the earliest. But if this is a strong uptrend, there's no way to predict that. That period of good merchandise coming out can last 8 to 10 weeks. So there's going to be opportunities, even if you got flat-footed by the follow-through days, if this works. Still got headline risk. Got some clarity on the Fed, but we got Bullard still talking about half-point rates needed soon, and then Powell chimed in this week and sounded like he might be in favor of that. EPS season's wrapping up, but then April 1st, April Fool's Day, of course, we start over once again with Q1 EPS season. So we're in that 5.5 months straight of earnings season. So that can move a market either way, no way to predict. Still got that terrible war situation in Ukraine. If we could get a ceasefire, seems like that would help the markets, or at least strong indications of a ceasefire. But if they get to some of those Ukrainian leaders, it could go the other way. So no way to tell. And as always, Canslim works better when the NASDAQ is trending above an uptrending 50-day SMA line. Works best when it's trending above an uptrending 21-day EMA line. So let's look at a couple charts. I just threw some in here from a variety of sectors just to show you how much is working. So let's look at weekly charts, since that's where we're supposed to do most of our work. So here's one of the shipping stocks, triple-digit earnings and sales. Zim, of course, has been the massive market leader coming out of its IPO base last year, and had that big dividend recently. So it's just been a beast. That's just another one. Oh, sorry. Let me start at the top of the list. BHP Groups, this is a mining stock. So metals, mining, we're seeing do well. SCCO, this is copper. We talked about this at our last monthly meeting. CMRE, that's the shipping one I just showed you. Oil and gas, still seeing those set up. This is one that hasn't really broken out and taken off yet. Darling Ingredients, kind of an alternative biofuel type play, it's setting up. Planet Fitness, different group altogether, industry group 33. These were all so far in the top 40 industry groups that I'm showing you. Healthcare is one setting up, tried to break out, still in the buy zone. Arista Networks, here's tech, had an early entry, got 3 weeks up in a row, high range closes, RS line going to new highs. So, when we had the first follow through day in this bear market, we didn't have any setups. You just couldn't find what we're seeing now. Recent IPO, broke out, kind of looks extended to me now, but it's in the chip area. So again, we're seeing some tech come back. Some of these are outside the top 40 industry groups, but we're still seeing setups. SciTime, tech stock again, Regeneron, medical area. We've talked about this one at several of our meetings. SQM, this one broke out, then gapped up on earnings and is up at 26% from the pivot already. So that one took some profits in, beautiful RS line right there, triple digit earnings and sales. So that's just kind of a nice scattered sampling of seeing strength in several industry groups. So we'll go back here. Our last monthly educational meeting was on Wednesday, March 16th. Coincidentally, that was the Fed meeting day and the follow-through days on the S&P 500 and the Dow. So good timing. Here was the agenda. So we spent a lot of time on two topics, looking at the RS line, and then we also took a big picture view of not the EV stocks, but the cousins to the EV stocks. So we spent a lot of time talking about that, and I looked at a lot of charts and tickers, and talked bottoming base, did some post analysis, that sort of thing. Our next monthly meeting will be Tuesday, April 12th, 2022, 7 p.m. Eastern. Those are recorded if you cannot attend live. You sign up at the Stockyard Meetup site. I'll show you that in just a minute. Tuition is $12 per meeting, and they're recorded. You get the recording, the slide deck, and usually links to several articles pertinent to the topics that we cover. If you don't sign up for the meeting and just want to order the materials later, it's $15 because it's more work for me. So it's easier to sign up for the meeting. If you've never come to one of our meetings, if you'll sign up for the April meeting, I send you a courtesy copy of the March meeting, the recording, the slide decks covering all the stuff on that agenda that I just showed you. In April, I've got the educational topics pretty much pinned down. I had a real good question about, what do you mean when you say wade back in? When you get a follow-through day, what's that mean? What's that look like? Does it matter how many follow-through days we've had? What's your exposure before the follow-through day? How fast do you wade back in? What do you use to wade back in? If you can't find any Canslim stocks set up and breaking out. So we're going to look at that in some detail, sort of a macro view, and then also a micro view, drilling down to each individual's level, comfort level, where they are. So we'll talk about that, and I'm sure we'll do post analysis in the group teaching portfolio too, but that'll be the main educational topic. So here's a list of prior meetings. These all can be ordered. If you don't have written cell rules, you really need to order those 3. January, February, March. I put a lot of time in putting those together, so you can have your own written set of cell rules. You can just email me. I'll send you the list and how to order them. And then the meetup sites, just so you know what they look like. There's a Stockyard. That's where you sign up for meetings. So you just go to the event and sign up. It's all handled in there. And then the Greenville East Side site, so when I run with IBD, so join that. If you go to the More tab, it's hard to find. I don't know why they have to hide the good stuff, but if you go there, click on message boards. The top 3 pinned messages are from me, and the very top one there's tons of links in there, but the top one has this year's group teaching portfolio, which I update each weekend. It has the whole coloring book spreadsheet, which you just saw, which I update for you and post on a weekly basis, and you can follow it daily on my Twitter feed. Link to Steve Sweat's window of opportunity spreadsheets in there, and then there's a whole lot of educational materials in those other 2 pinned topped posts. All right, so I think that's it. You can go to my YouTube page where you're watching this. There's educational videos on there too, and our whole meeting from May of 2021 is on there if you want to see what an entire monthly meeting looks like. So that's it. Hope you guys have a great weekend routine. Hope the market gives us, even if we go sideways a little bit here, that would be great. We just don't want to see the distribution days coming in or piling up, or the breakout suddenly failing all of a sudden and not working. So have a great weekend routine, and I'm out of here.